Okay, the market's been open for just over an hour, almost an hour and a half. We're looking at the Dow. The reason that we're looking at the Dow is because in our market outlook that we release at 10:40 Eastern every day, we noticed that of the equity indices in our coverage universe, the Dow was the only one that our models were signaling a flat institutional bias. So every other equity index had a short institutional bias. We look at the Dow, one that stands out, that's significant. We look at the Dow, we get this 188 point opening range. Our opening range forecast models were forecasting, I think, 136 points. So we exceeded our opening range forecast here at the open. We've been balancing inside of this opening range. We did 15,751 lots in this opening range period. And then our opening range forecast model was forecasting twice that amount. So we put in about 16,000 lots on a larger than expected opening range. We have an institutional bias that has been flat. Our models have been forecasting a flat institutional bias in the Dow, despite there being short biases in other equity indices. And so we're looking at just the combination of these things. Range extension, larger than expected opening range, on less than expected opening liquidity with a divergent institutional bias. So that's what caught our attention. So we're just looking at the Dow here. What we think could potentially happen is if we break this opening range here, we may see a reversion. It's possible that we could see a reversion if we can actually trade outside of this opening range. We may revert and have the Dow converge toward the institutional bias that currently exists for all of the remaining equity indices, or we could just balance inside of this opening range. But we just found this interesting. Our daily range forecast is significantly higher than the 5-day moving average, so 505 point daily range forecast versus roughly a 410 point 5-day moving average. Given that this is the holiday lull, in a sense, we're not really expecting to realize that. But what really has our attention is this divergence between the institutional bias in all of the other equity indices versus the Dow versus the larger than expected opening range on less than expected liquidity.